Hello, traders. Gary Wagner here. It is 12:04 in Honolulu, 5:04 in New York on Friday. Happy Aloha Friday, as we say on the islands. It is the 11th day of November, 2022, and this is the daily report for gold and silver, our weekend review. Traders, this was a tremendous day as well as week for gold pricing. You can see on our weekly chart here that gold has risen just over $90 throughout the week and gained $20 just today. The vast majority of gains today and this week were experienced because of dramatic dollar weakness. In fact, the dollar had the greatest single week drop right here in the entire part of 2022. On Monday, the dollar index opened at approximately 111.03 and is currently trading at 106.225, which means that it had a percentage decline of approximately 4.286%. At the same time, we saw gold have a $91 gain, which is a net gain of 5.44%, which means that dollar weakness accounted for roughly 78% of the gains seen in gold. Since the dollar is paired in gold, there is a direct correlation between a drop in the dollar and a rise in gold pricing. In other words, only 21.28% of the rise this week in gold was directly attributable to market participants bidding the precious yellow metal higher. Finally, silver did have a modest gain today of 0.43%. That's a total of 9 cents, with the December contract currently fixed at $21.79.5. This first chart is a weekly chart of the dollar index. I've put it up. It begins, of course, at the beginning of the year right here, first trading day, January 3rd. And this week is this large red candle in which it opened, as I said, at 111.03 and closed at 106.21. When you look at the candle size, it is easy to see that this qualifies as the largest single week drop in 2022. And it was dollar weakness that was the primary cause of gold's strength. We're looking at a weekly chart of gold. You can see that this is a very large candle, the largest weekly move this year in gold, going from 1678 to 1769, a $91 gain. And out of that $91 gain, 78%, almost 80%, was directly attributable to a falling dollar. As you know, inflation has been spiraling throughout this year. In fact, it wasn't until March when the Federal Reserve began to raise interest rates by 0.25%, and at that point, inflation was at 8.5%. Over the next few months, it would peak at 9.1%, and then from 9.1 in June all the way up to October, we started to see slight declines until we saw the CPI come in at 7.7, which was reported on Thursday of this week. I believe that that has changed the outlook and market sentiment for gold, in which market participants are looking at rising inflation rather than looking at rising interest rates, which is what has taken gold down tremendously from 2078 in March down to these lows of about $1,620 just recently. Now, on this weekly chart, this is one of the models that I have begun to create for where I believe we could see gold go to by the end of 2023. So we measure the rally just prior, which is when the market moved from 1670 up to this year's high, 2076, so that's this rally here. We then look at the correction that follows, and we start our fib extension from the beginning of the fifth wave, which would be this line right here. And what this study concludes is where, in fact, we could see this current rally move to. Now, realize this is not going to be a straight line up. If it was only a one-to-one, it would take gold by the end of the year to 2026. However, I believe it is more likely with the fundamentals behind gold right now, which is weakness in US dollar, and gold very, very much oversold. We could see gold go as high as 21.81 by the end of 2023. This has been Gary Wagner wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.